Thrushka, what worries you the most? There are a number of risks that are kind of bubbling over the surface, but is there one big one that is more concerning than others?
I think the thing that's right now in focus is the spread widening that we have in U.S. credit. We've seen vulnerabilities in IG throughout this year, but it's now the widening that we're seeing in high yield. I think that's more a reflection of what's happened in other risk assets. It's a catch up to that, but that's an increasingly in focus, and I don't think that's purely linked to all the trade risks that you talked about, the oil prices. I think this is something that we're watching more closely. Is that a better sign of the second derivative of growth momentum slowing?
Thrushka, in honor really of Black Friday and all of the sales shopping going on, this is our M Live question. So this is our Markets Live blog question. We urge everyone to actually go out and check out on our Bloomberg terminal our markets blog. So this is what we're asking: where should traders go bargain hunting? Is there something that looks cheap, either valuations or unloved at the moment?
I'd say, well, there are parts of EM where valuations are cheap, but the issue I'd have is that the catalyst for upside is missing. So I'd say that's one area. The one thing that we're very focused on is the fact that U.S. cash is now an asset and an asset class in its own right. Just makes everything else look slightly less attractive. So even though valuations may look cheap, so you could go bargain hunting, the fact that that trade-off is there, that didn't exist for a long time, just means that bargain hunting type of argument is less compelling.